property manager, you're looking after one of the biggest investments that Australians will make, investment into property. Property investors are investing in property with the sole purpose of making money, wealth, now and in the future. Property depreciation makes a big difference to the cash flow on investment properties and therefore the money that these investors do make. Many don't take advantage of it properly. What we're going to do is arm you with the tools to make sure you can add some value and help them to increase the cash flow on these properties. Well, welcome back, and I have Irene from BMT with me here today, and in the first of our role plays I'm going to play the property manager and Irene will play a new investor who's in the office and just finished signing up the paperwork for a new management. So Irene, I've got all the paperwork I need now, we're signed up, I've got a couple of prospective tenants, so I'll get onto them straight away and we'll get it listed on the net as discussed, and let's get it filled up for you.
That sounds wonderful, thank you.
Great. Now look, as part of the service we want to make sure that our new clients and existing clients get as much money out of their property as possible. I'm going to get as much rent as possible, but I was talking to the guys from BMT the other day, and depreciation is something that so many investors apparently don't get all their deductions for. So we'd like to offer to have them to have a look at the property and see what sort of deductions there might be available to you, and you can have a chat to the accountant, see if you can get some more money out of it.
Okay, yeah, definitely. No, that sounds really good. My property is a little bit older. Do you think it's something that I'd still be able to claim for?
Well, look, I'm not the expert on on how it all works, but all I know is potentially there's some money in there, and older property still gets depreciation. I know they said it wasn't as much, but generally, but they'll be able to have a look at the photos and say, you know, this is how much depreciation might be able to get, and you can just take that off the accountant, and they'll work with the accountant to make sure you get as much money as possible. Would you like me to get them to give you a call?
Yeah, no, that sounds really wonderful. If you could, that would be great.
Great, I'll make sure they call you in the next day or so.
Thanks, Brad.
Thank you. Welcome back. The role play that we're going to do now is basically I will play the position of a property manager who's in the process of signing up a new landlord, which will be Irene today. We'll just talk about, you know, depreciation, where that fits in and evaluating to the client. So Irene, we're going to do a really good job of managing your property. This is your job, by the way, guys. As part of the service, what we like to do with our new and existing landlords is to make sure they get, you know, the most out of their property that they can. You're investing in property obviously to make money, and I'm going to, you know, try and get as much rent as we possibly can within the market. You know, I was just chatting to the guys at BMT the other day, and they said that a lot of investors don't do depreciation properly. So what we do is there's potentially a lot of cash flow there that you may not be getting. So we actually sort of have already sent the address of the property off to them, and they've provided us with an estimate in the documentation here, and it's free, that says, you know, your deductions for depreciation should be somewhere between $7,000 and $9,000 for the first year. And what we suggest you do with this is take it off to the accountant, have a discussion with them, and just make sure you're getting as much as you can out of this property.
Well, that's actually some really good information. Obviously, the more money I can get out of it, the better. So I'll do that. I'll have a chat with my accountant and, yeah, definitely be in touch with you again. Great.
And we'll continue on with, yes, we're good property managers from here, and the rest is yours, guys. Thanks. Welcome back. The next role play we're going to do is I'll play a property manager who's calling up Irene, who is an existing landlord, and I'm just thinking about her at tax time. Ring, ring. Hi Irene, it's Brad here. How are you today?
I'm doing really well. How are you, Brad?
Yeah, I'm very good. Irene, I was just thinking about your property at tax time, and I ran into the guys from BMT the other day, and they're quantity surveyors that do depreciation, and they said to me that something like 80% of investors are not getting all their depreciation.
Okay, well, I would be one of them.
So you're not really aware too much of depreciation?
No, I haven't really heard of it before.
Well, look, you're an existing investor, and look, there's some more cash flow might be there in this because it's deductions that relate to the building in some way. I'm not the expert, but I know that the guys will have a chat to you about your property and see how much deduction that you might be able to get. And then if you're going to get some more deductions, then that'll be great. You'll get more money out of your property.
Well, that definitely sounds good. Definitely.
Great. Well, I'll get them to give you a call and just have a chat and see what sort of deductions you might get.
Yeah, well, feel free to give them my details and I'll expect a call.
Great. Thanks, Irene.
Thanks for calling, Brad.
Bye. So that's a simple call that you can do that just sort of says, I'm thinking about you at tax time, want you to get as much cash flow out of this property as possible, and we from there will talk to them about their property, give them some sort of idea of how much deduction they might get. That's free, and if they will take it off and talk to their accountant, then they can see if we're going to get more deductions for them.